Happy Wednesday. Today we're going to go over some bunch of different things. I got Mike Connolly in here. I'm going to bring him up in a minute. So he's got a bunch of questions, a bunch of different things that he's at a crossroads with inside this business. A lot of times just getting started or getting into it, like it's the hardest part. Before we get going, one thing we want to bring on is this. Hang on, Mike. What's going on, man?
Hey, Dennis.
How we doing today?
Well, I'm very excited to chat through some land issues here.
We all have them, right? There's
Just
always there's times where I'm like, what the hell am I doing in this business? Like, I don't even know sometimes. So don't worry, it's not just you, it's everybody. So tell me a little bit about what you got going on. So where are you in this business? I know you said you have some prior real estate experience, right?
yeah, yeah. So I mean, I've done dozens of deals back in the day. So up until '09, buying and selling houses, keeping some of them, did really really well with it, and then hit a brick wall in '09, and basically I decided to just leave it all and go do something else for a while.
Yep.
But in the past couple of years, I've been getting back into it and sort of discovered this whole land thing um, with Jack Bosch maybe a year and a half ago, something like that. And then kind of progressed through a series of different, coaching programs, and then discovered Leah here about a month and a half ago, maybe even just a month ago.
Nice.
And yeah, and that's, to me, that seems like, wow, that's really turbocharging things. So as far as the land business goes, I'm trying to count them up this morning. I think I know I flipped at least 4. I just got done with another one recently. Bought for 10, basically sold it on a land contract for deed for about 24.
Okay.
So that's kind of where I am with the land business. Just ultimately, what I'd like to do, Dennis, is move into more like residual income type things. So either build the land business to where it's its own machine. I know that Ryland has sort of done that, and Sumner, and or just acquiring properties that lease purchase deals or it's even some commercial deals where the income stream is just part of the thing. But right now I'm focused on cash flow, putting together a war chest, and so land business seems like that's the best way to go. That's my primary focus.
Yeah, it's kind of like wholesaling houses, right? This is like you need a high earning business to be able to invest in real estate realistically, or high earning income, whatever thing you make money, right? It's at the end of the day, you got to make money to go buy rentals, do all that stuff. So this business affords that type of opportunity where you can make big chunks of change pretty quickly, and that allows you to reinvest that into obviously real estate or whatever, stock market, whatever you want to do. Personally, that's what we do. We flip land, and then we take that money and we dump it into real estate, right? We'll buy mobile home parks, single family homes, whatever. So like we have two houses we're trying to buy right now. That'll be kind of like personal use, but also like short-term rental use, right? And I'm taking my money that I make from here and I'm dumping it into that, and then whatever. So that's the best part about this. Now, this business is good. It's definitely lumpy sometimes, but once you've built like a streamlined system and you have enough, you're in the black, you have enough money in the bank account, it doesn't really matter the day to day, because you got to look at the long stretches, right? And you're like, okay, what did I do this past 6 months, not this month, right? Once you start looking at in that scale, you realize how much money you can make and how much you've made and how many things you've done, right? Okay, so have you done marketing now? Are you marketing right now, or?
Yeah. So I've switched over to being much more focused, and I sent my first scrubbed list last week to Rocket Print. That's the mailer that I'm primarily using at the moment. Up until I discovered Leah, I was sending the neutral letters, just inquiring, hey, do you want an offer? But as of actually this week, I think the mailer went out Monday. We sent a grand total of 318.
There you go. Hey.
Which was that list started at 900 something when I pulled it from the data source, and then after several scrubs, including the one at Atlanta Insights, it boiled down to 3. So
it's about right.
So
we only mail like 25% of the list we pull.
Yeah.
So we'll pull like 10,000 records, let's say. We're only mailing 2,500 because look at how much mail you're saving.
Oh my gosh.
Yeah, it's crazy.
Yeah. So. I love that. I love that focus.
Yeah.
So, so this mailer is a single page letter, and it just basically says, hey, here's what we can offer you. And the response form, there's basically a little form at the bottom that just has a signature and says, yes, I accept, or no, this is what I wonder if you would accept. And then the letter itself says, hey, if you have any questions at all, give us a call. And there's a toll-free number there, or email. And then I've got the email address or fax, but it's pretty straightforward. So I guess we'll start testing and see, if that works or not. I've been looking at other.
Marketing like that, like picking your letter out, is something you kind of have to you're going to evolve over time. You're going to test different things. The most important thing is just getting it out there, right, in the beginning.
Yeah.
And that's pretty much it, right? A lot of people get stuck and they're like, I just gotta, I can't figure this out, whatever. Just send something. Doesn't matter. It could just be a fart in a bag. Just send it, right? Just do something. And as long as you get it out there, and then you'll come up with iterations. You're like, maybe I should remove this. Maybe I should add this, whatever. Like now, my mailer is 3 pages, totally different. It's got a whole bunch of stuff in it. So, and even now I might go back and change things. I'm like, yeah, it's probably too much, right? So there's different things you're going to add, change, and develop as you go along. So yeah, that's good. So you got the first one out. Is this just one market you sent it to?
Yeah. So this go round, I picked out 3 zip codes. 2 of them are in North Carolina. One of them was in Florida. Just based on what I was seeing in Land Insights on those zip codes, that was kind of how I targeted them.
Nice. Yeah, it's good. Doing multiple, stacking your list so you get multiple touches at different places is ideal, right? You don't want to go, I know some people that just send all their mail for the month to one county. It's what do you expect things going to happen there, right? You're not going to get a bunch of stuff coming back. What we find most people have success with is if they're hitting multiple markets every month, right? Multiple states, different things like that. That's when we see most people seeing the most success, right? On average, we're hitting about 15 different markets, whether that's zip codes or counties, every month, and about 6 different states a month. That's about average. So, and we're only sending, right now we're sending about 10,000, and we're ramping back up again to about, 25, 30,000 again. But yeah, so just consistently trying to hit multiple markets. I'd say it should probably be, if it depends, how much are you sending a month? What's your goal?
Yeah, so the goal would be to be sending somewhere between 4 and 6 at this point. Let's call it 5, I guess.
Okay. So 5, you should probably try to hit between 8 and 10 markets, ideally.
Wow. Okay.
8 and 10 zip codes, right? If you're hitting that many. Because if you're hitting a zip code, you're probably only, like you said, 300 records once you scrub out. That's not that hard to get, there's going to be some that are 2,000 records. Fine, do them, but there's going to be others that are 300, 100, 200, whatever the case may be. So, yeah.
Yeah, one of the markets, so I've had, for some reason, pretty good luck in a market that doesn't really seem to show up as being one of those, quote, pools of liquidity.
Yeah.
But I've built up a pretty nice buyers list because we were advertising, some dispos there. So it's, you know, I'm kind of going, gee, I don't know. It seems like the indicators aren't really great for this market. Maybe I just need to hone in on some of the zip codes. That might be the solution. But given, you know, that I've got a buyer's list, it seems like that would be a pretty good indicator what, you know,
Yeah.
of a place to go.
There's nothing wrong with going to a market that maybe doesn't meet all the metrics, but if there's demand, there's demand. That's all that matters, right? So as long as there's demand for land in that area, then market to it. Maybe just adjust your pricing. Maybe if like you look at it and the days on market are longer, okay, then just build in that in the front end, right? Let me offer 35, 40% to a market value. In this market, it's a little slower. But in busier markets, I'm offering 55 or 70 sometimes, depending on what it is. So it just kind of, I tailor it based on the market and what the market's telling me, and not just like a flat, I'm offering 55% of market across the entire board, no matter what, right? Like I mailed some this past month that we split up a zip code even. There was a zip code that the bottom half of the zip code was hot, the top half was not. So when we scrubbed it, I said, okay, separate the two. Let's put 25% offers up top and then do 55% offers below. But then there was a little pocket that we offered 70% of market just because this area is super hot. And the numbers just made sense. So you might want to try splitting it up sometimes, offering different amounts for different areas. So like if you're in an area like that, where you have like a little bit of a honey hole and you know what your buyers are looking for, then if you know your buyer's paying $10,000 an acre, he's already built in, go offer, 7,500 an acre, make a 2,500 acre parlay and move on. Especially if they'll do assignments, So that's not like always the truth, but like, or always the case. But if you have a buyer that's committed and ready to go, it doesn't hurt. Shop for a property for them, or send a neutral letter and then negotiate it out. So, yeah.
Yeah, I'm still trying to figure out like sort of a method for pricing. How do you just like do that intuitively, or I mean, kind of like what you just talked about? You figure all these different parameters of it and kind of base it off of that. Do you base it on like a percentage? I mean, one of the big questions for me is like, if we send out a bunch of letters offering 40% versus like if we kind of really get into the weeds a little bit and say, well, okay, so my minimum profit per deal is 10 grand, and depending on the price range that I'm in, as long as I can make 10 grand on a property, then I'm willing to willing to offer whatever it would be. So that might even entail 60 or 70% of value. So I'm just kind of curious, how do you decide how to price, a list like that?
All right. So when I'm pricing something, I basically look at it. So to start with, right? We typically look to make $30,000 per deal. Like that's my goal on every deal. So what we'll do specifically is we'll look at our market price and we'll say, okay, market price, our value, our perceived value is 75,000, right? So that means I don't want to send an offer below or above 40,000 to that property, let's just say, because that builds in enough spread that I have closing costs, all that stuff. I'll still make about 30K, right? So it's as simple as that. As I just say, I'm only going to do this because that's all I want to see, right? So it just comes back to like once you figure out your price per acre for that area, then price your list, and then I just remove rows that are maybe too low or something like that, or the spread's not big enough, right? I mean, you could do that before you pull your data, because if you know like, hey, stuff's trading for 10K an acre, well then I'm not going to pull anything below 8 acres because I don't want to sell. I don't want to have to deal with a deal that's smaller. Let's say, right? I will say though, a lot of people that I talk to, their KPIs tend to trend better on the smaller buy for 20, sell for 40s, or buy for 30, sell for 50, those types of deals, their KPIs are better, meaning they're getting more deals, um, more leads per mailer, right? So they're getting like close to like 1,200 per mailer. They're getting a contract, right? So every 1,200 mailers they send, they get a contract. Versus the larger properties with bigger spread, we're typically seeing around like 2,600 to a deal, to a closed contract. So there is that, right? So you might spend a little more, but you're making a little more. Versus the other one, maybe you could just do 10 or 20 of those little deals and absolutely crush it, right? So that's another thing to think about too. It's just where you want to be. If you're okay making 10 grand, make that, just go for the 10 grand. Get the deals that are buy for 20, sell for 40, and just keep pumping those out all day long, you know?
The first deal I did in the land business, I bought for $1,800 and sold it. My net was like 34,000.
Damn, that
I
was a
got
good one.
spoiled. I'll talk about beginner's luck. Trust me, they didn't all go.
I know. Then you're gonna chase that high for the rest of your life. You're like,
Yeah,
I need this again.
yeah. It was the wrong way to start.
Yeah, no, it's amazing. That's like a 200% return, right? For 200, yeah, 20x. It's crazy. That's really good.
I had offered more, but then it was this really weird lot, and I went back to the seller, who was, it was like a probate thing or something. She was just trying to get rid of it. And I said, this lot is just really funky. I don't know if I can even do anything with it. Would you consider?
Mm-hmm.
And we had a conversation, and she was willing to accept less. And I just basically, I actually offered her more than she was willing. But at this stage, I think what I'm shooting for is more like you said, the buy for X, sell for Y, but just have, develop a stream of those so that we can kind of have a system, that we can do consistently. I'd like to sort of build, the way I'm picturing is we build that base first, although from what I understand, I guess, in some ways those are they're a little bit harder to do. People are a little bit less, interested in talking to you. And if you've got a higher price property, you've got sort of more leeway to negotiate is what the sense I'm getting. There's fewer and fewer and farther between, but
yeah, we see a lot of like times that there's a big drop off in price point and offering like a low amount, right? So if we're offering 55% of a property and the property's, our value we say is over 250K, we're seeing a huge drop off in those leads coming in. Like very few actually call on that. But the ones that do call make all the other ones that you mailed worthwhile, right? Because now you're getting 100K spread on a deal, right? So you're going to get very low. Your KPIs tracking on that stuff are super low. But when a deal comes in, it's so worth it that it's like, okay, yeah, this took a long time to get, but once I get it, it's worth it. So we're going to keep mailing it, even though the KPIs might not track. But building out, you need to have like your base, right? So Sumner does something similar to this on his land website. He usually has like these he calls them like what the hell? I forget what he calls them, but basically it's like he goes out and shops for stock, right? He'll go and buy all these like little infill lots, right? A bunch of like little desert squares, infills, all this stuff. And he's like, they're not huge money makers, but they're traffic makers, right? They're bringing people into my website, bringing people in to look at this stuff, which helps generate more looks and this and that. So all it does is really help build his website up. And then it's also inventory that he could sell. And while the people are there, like, well, why would I buy 10 acres here for, $15,000 when I could go buy this nicer piece of land for like 30,000, right? And then they'll go shop for that instead, right? Kind of just funnels them in. So there is something to be said about building a good base of those smaller ticket properties. One, it'll keep your business floating all the time because now you always have money coming in and out, right? That's the other thing too with the larger parcels. A lot of times, they're typically going to be bought with financing or this or that. They're going to have contingencies. typically under $120,000, most people are paying cash or pretty close to it, right? So they're going to turn over a lot faster. So that's another thing too, is like the length of time it might take to sell a property over 120K might take 4 or 5 months, right?
Mm-hmm.
Between everything and all that stuff. But
Yeah.
selling a 40K property, somebody could walk up and say, hey, I'll buy it today. Like you're done in 10 days, right? So I think it is a good thing to have a good base of smaller properties to go off of, right? That's what a lot of people do with notes, right? They'll buy a bunch of little properties, sell them on notes,
Mm-hmm.
and then use that residual income to build their business. So that's another whole business to do too.
Yeah.
So
That leads to a question, Dennis, of like how do you finance deals? And I'm right now I am thinking more kind of in that, the 40K range. So like how do you decide whether to do a double close or, an assignment or, just outright buy it? And I know sometimes, if it looks like it could slip away and it's a really, really good deal, you probably just want to find some way to get it financed. And I haven't really explored that yet. I've been mostly doing stuff either out of pocket or just, trying to, or doing double close. But I mean, how do you recommend financing, these deals kind of in that range?
it totally depends on like for me, I have access to like private capital, so I have a lot of lenders that we could throw in deals, right? As long as I look at the spread and I'm like, okay, this is pretty good, and the market's really moving, then we'll throw a lender on it. I typically save lenders for deals that I know are going to move really fast because I don't want to put them in a deal that's going to take a long time.
Right.
So you have that. Inside Leah, there's a bunch of people that are fund deals that like typically JV dealer, like deal funders. They're 50-50, 60-40, 70-30 splits, but there's no risk of your capital or anything like that. So as long as the deal goes through, then it's a good split. You still make, 70% of it, or whatever the case may be. Right. There's that. There's building up your credit, business lines of credit to then borrow from. You could do 0% interest cards and like borrow from that. Go lease, buy properties and whatever. You could do that. And then double closing. Double closing is good if you think it's a fast moving market or you're unsure about something. So what we've started doing with a lot of our properties is we'll get them under contract. We'll just we run a quick baseline title. And once we get our baseline title done and everything looks clear, we're throwing that thing on the market. So within 2 days of us getting a signed contract, we're on the market already. And we're gauging interest. Now we're going to let it sit on the market while we're like doing our due diligence and all this stuff. And let's see what type of offers we get. If we get anybody calling and saying, hey, I want to buy the property, okay, great. Well, either push or double close, or if we see a ton of interest, tons of views and all that stuff, then we'll just move forward with buying it. We make that assessment again and say, okay, we like this. Let's just buy it now and then go forward from there. So
Are you listing those? Do you get it like, what do they call it? Power of attorney and listed, or do you just not do it MLS?
No, we put it on the MLS, but in our contract, we have, in our contract, we put that, we have a right to market and list them on any platform, including MLS. So basically they get a POA signed when they sign that. So
okay.
Yeah, as long as it's
a clause in your agreement, and then you'll send the POA after, or okay.
So no, that is our like power of attorney.
That is it.
We don't really need a specific one, except some states you need an AIF, attorney in fact.
Right.
Some states you do require that, like South Carolina. Typically, a lot of times they require that, but usually the listing platform is going to kick that back more than anything else. So we're using like Brokerless or Qualia. If you're using Brokerless, you go to list with them, they'll look at it and be like, hey, you don't have an AIF or you don't have a POA for this. So you have to get it. Right. So there's different things. Yeah. So I have a title search for double close I want to do. So, but yeah, so we have that. So then, that's how we usually list our double closes. Like I know with South Carolina, you're technically not supposed to be double closing or whatever.
Right.
That's more of like an agent thing. than it is necessarily like a legality thing, right? So, what we listed a couple properties that are in South Carolina as double closes. We have no problem because in our contract it allows it. So we're doing it.
Yeah, I've run across agents, like if I try to list it not using brokerless or one of those flat fee services where, they they just freak out. It's like,
it depends on who it is. Yeah, it's
yeah,
agents won't do it like a lot of time, and that's the thing too. Is like right now, we used to involve a lot of agents. Agents were like our bread and butter. There's certain properties I will use an agent for, and there's certain areas I will. But we're like at this point, we're like we could handle the incoming leads, so we set up a second phone number with Answer Force, and we could handle the incoming leads. So what we're doing is just taking everything in house. And that, like you said, building up a buyer's list helps us build up a buyer's list. So we know when we have other properties coming in, like we could just remarket to them, just be like, hey, we have this. Do you want this too?
yeah,
Right. That gives us that opportunity. But two, we're not pissing off any agents because we're directly listing. So we're not fighting like, or having them list something and we got to cancel it. Right. So it just kind of keeps us in good faith with everybody. So that's another thing we noticed too. So, yeah. So as far as like pricing and stuff like that goes, what are you having issues with coming up with a price per acre? Is that one thing you're finding, or?
I don't worry about it too much. I just send out mailers and see what happens type of thing. But I'm just, kind of such an early stage that I wasn't totally sure, like what kind of a method to use. Are you familiar with Priced, PRYCD, as a data provider? Yeah.
Mm-hmm.
So I think what I did on this last mailing was, you can like set a parameter for whatever percentage, you want your offer to be. And then that shows up as one of the fields in the list that you send to the mail house. So I forget what I said it. I think I just set it at 50% on this last list, just, and then I looked at the list and I saw, well, there's some, way at the high end of the range. And I might, offer a little bit of a higher percentage there, for $120,000 property than I would on let's say a $40,000 property. Yeah, I mean, that's, I was just wondering, if there's anything more to it than that. And I kind of get a sense that, yeah, you do want to maybe, break your list down into bands according to, if you can still make the minimum net that you want to make on a deal, that's kind of another way to look at it besides just the percentage of, what the ARV would be type of thing.
Yeah. So what we were doing too for a while, and I didn't test this for like deep enough to really give me a good sense of if it worked. What I was doing is I was actually doing, I had a formula. Basically, I would take market price times 0.9, which takes 10% off the top for an agent, and then minus $30,000, and then times another 10%. So another 0.9. So market price times 0.9 minus 30,000 times 0.9. And that would give me almost like an MAO, right? That allows me to make my number. So we tried mailing that out, and we mailed it out into some pretty expensive areas. So like Wake County, North Carolina, which, like that's Raleigh and all that stuff. We also did it in like by the Charlotte area, some of these more competitive areas, just to test it out and see how it worked out. I didn't really go deeper. I should have sent more mail like that. But what that allowed me to do is like some properties that maybe we were supposed to mail, if we were mailing 55%, we were offering like 120K. Well, now we're offering like 180K, right? So it's way different. We did see a bunch of calls on that, but we did this before we started scrubbing. So it turns out the ones that called were all the junk properties.
Right.
So, there's that. So you could do something like that if you wanted, not necessarily like a percentage, but percent profit, right? Like a minimum profit offer, right?
Yeah, that's real interesting. Yeah. I might try that. I like that.
Yeah, that's another way we did try it. But at the end of the day, honestly, like we always notice that all this stuff goes away, like worrying about like what's your offer price, are the leads going to come? All this stuff kind of goes away once you break through that like 10,000 10,000 pieces a month. Once you start doing that, you're getting enough leads and you have enough stuff coming in the pipeline that you're like, I don't care, I'm good. Like I'm getting enough. This is good. And you're gonna just take the ones you want, and that's that. So we did notice that's like a big threshold for a lot of people.
Well, that sort of leads to another question for me, which is, are you just doing mailers, or, I understand texting and cold calling are, I don't know if those would be follow-up or just cold, but, I'm also trying to sort out what's, I'm just doing mail for right now, but I'm kind of wondering what's a good marketing mix to shoot for, as far as using some of those other channels.
I think there's like an ascension plan, right? Blind offers are the best to get started, because what it's going to do is going to reduce that lead pool that's coming in. So it's not going to exhaust you like trying to do everything at once by yourself, right? Once you add that, like a VA that's your generalist VA to help you do pricing, mailing, doing all that stuff, the day-to-day stuff, that's when you could start exploring another channel. And at that point, then it's either direct. I would add in like maybe some direct mail neutral letters, or I would add in some text messaging, things like that, right? The thing with text messaging and all that stuff is it adds a lot of like chaff, right? You're going to get a lot of leads that are just going to go nowhere, and you're going to waste a lot of time on that. So that's what I like about the blind offers, is it pre-qualifies most of these leads, right? The ones that are actually interested are going to call you. The rest are not, right? So it just becomes a volume point. Just add more volume, get more leads. Now, when you're further along and you have acquisitions and you have all this stuff going on, that's when it's good to add like 2 or 3 channels, right? Have texting, cold calling, and direct mail. Like right now, we're at the point where we have, we're going to be opening up 2 more channels. So we have 3 channels right now, and we're going to be adding in 2 more, right? So we're adding in cold calling, and we're adding in, we used to do texting with houses, and I'm like, not a big fan of it, but we might go back to it just because. But I'm doing it a little bit different. I'm not running it in house. So.
Is that cold texting or follow-up once you've sent a mailer or something?
Cold texting. We do follow-up texting all the time. That's normal, because
okay,
we always want to stay in touch. Like we have like a really good like lead follow-up plan that we kind of stick with. So yeah, we have cold texting and all that stuff, cold emailing, or and not cold texting. We have texting and emailing that we add in to follow-ups.
Right.
So
and
that's another avenue. Cold emails too. It's another one.
Right. And are those follow-ups based on people who respond, or just like on your whole mailing list that you sent?
Our main follow-up, like a follow-up sequence, is somebody that's actually called in as pre-qualified.
Okay, so your responders, yeah.
Exactly. Yeah, what we're gonna do is like we remail counties, so we'll mail a county, then we'll remail a county like 3 months later. Right?
Okay. Yeah.
Whether we change the pricing or we turn it into a neutral letter, whatever the case may be, or we might just mail the exact same thing. It just totally depends on the market and all that stuff, and which county and whatever. Like we have a couple counties that we just mailed that are neutral letters, just because we really like the county, we like the deals that came through. So we're like, let's do some neutral letters and see if we could generate any other business. So, yeah.
So do you send like every 90 days or something like that to the same list, or?
Not every single month. Not consistently, right? So we kind of gauge it by what deals we got back through, and we gauge it by, we'll like look at the market again. Okay, so we look at something and we say, okay, we mailed it here. Things are moving. The pending was really tight. All this stuff. Okay, let's look at the market again. Okay, it looks like it shifted. Let's maybe hold off for 3 months and come follow up in 6 months, go back and check it out again. That's usually what we try to do. And we might tweak the offer. We might send a different mailer, different things like that, right? Just kind of change things up a little bit. So
you're going to look at your results. You're not necessarily just going to kind of automate a sequence of mailings or something.
Yeah, unless it's like such a hot county, we know it's going to be always hot.
Right.
Then yeah, we'll do that. But realistically, things change. Things can change drastically really quickly. Um, and also too, just this election cycle. I mean, you've been in real estate for a while. You know how it goes. Every single presidential election cycle, the market pauses.
Crickets. Yeah.
It's the weirdest thing because it doesn't matter who gets voted in. As soon as November happens, boom, market turns back on for like a little bit, and then Christmas slows down again. It's just crazy, but that's just how it is. So
yeah, people holding their breath. Yeah.
yeah, exactly. They're like, I don't know what's going to happen. Okay, finally, we could sell this thing or whatever. We could buy whatever. It's so weird, but it happens from like May until November. It's a slowdown, and then it just goes crazy again. So, yeah. But okay, so as far as like markets that you're picking, are you mostly trying to go for just what's hot, or are you looking at like the type of land that's selling too, or what?
Yeah. So I just binge watched the new training in Land Insights.
Mm-hmm.
That's kind of, I think I've got a little bit of a better handle on like, market selection.
Mm-hmm.
Mostly, I mean, I'm just really looking for the quickest turnaround that I can get. Doesn't have to be high, like for me at this juncture, 10K per deal is fine.
Yeah.
And I want to make as many of those happen as quickly as possible. So I guess what I've been doing, and I'm probably going to vary this a little bit now that I've seen, Aries training, is starting with, the STR and looking at, let's see, what was the next parameters I was using? So that, and then volume of deals in the county.
Mm-hmm.
I'd also look at days on market.
Mm-hmm.
That was pretty important.
I look at days to pending, how long it
Days
takes.
pending, right? Yeah, that one I just recently, started thinking about. Yeah,
There's nowhere you could pull that data, but you can look it up.
it's in Redfin, right?
It is. Well, you can't pull the data, but you have to look at each when you're
Yeah,
going to each property. You got to look at each one.
Yep.
And you know what I actually noticed? This is a cool little trick. Let me just see if I can pull it up. Oh, hang on. Here it goes. Okay. So if you have, do you have Chat GPT?
Yeah.
Okay. Do you have 4? Like do you have the paid one?
Yeah.
Okay. So watch this. Ready? What's the hottest county for 20-acre plus vacant land in Washington State? Okay.
Huh.
Yeah, but wait, it gets better. Okay, so here's the top 5. Okay. How many days does the average property take to go pending?
Holy cow. Now it could be hallucinating,
I know, but the thing is this gives you direction, right? You could also use this as like a direction piece. So Kid County, look at these. San Juan County, about 57 days. I just noticed this the other day. I'm like, let me see if it does it. I did it. I'm like, get the hell out of here. And then I went back and I confirmed it, and it was pretty much spot on.
Really? Huh.
So like if you've already picked the county, you could just say, hey, how long does it take for average, properties to go pending in King County, whatever. And it'll go and look at how long it takes to go pending on all that stuff. Because with Chat 4, it could go online, right?
Right.
Go and search websites, do all that stuff for you. I was like, damn, that's awesome. So it does help you, like, if you're looking at stuff. It just gives you it. There's nothing to replace eyes and ears and looking at data, but this is a good indicator to like, hey, can you just like do this for me? I noticed that the other day, and I was like, okay, this is a real cheat code here. So not a lot of people like have that or will want to pay the 20 extra bucks, but like it could save you a little bit of research. Might as well
Yeah.
take it, right?
Yeah.
Yeah. So like if you're on Land Insights, you could take that and pick a county and pick a zip code and just go to chat and be like, hey, how fast are parcels of land going pending in this zip code? And boom, it'll spit it out for you.
Yeah.
So, and
That's
then just
pretty
confirm
cool.
it. Yeah. Yeah, it is pretty cool. So that's another little cheat code there.
I've been experimenting with like a competitor to ChatGPT called Perplexity.
Okay.
And supposedly, and I don't really know how to find this out, but supposedly it has more sort of current data. From what I recall, I don't know if this is Chat 4 or not. Do you know how far back Chat 4 can go? Isn't it? It was like for a while, it was like 2 years was the most current.
Yeah, that was regular chat
Oh,
before.
okay.
Yeah.
Right.
But if you're still on like the free version, that's what you're getting.
Right.
You're not getting fresh
Okay,
data. But if you're on the paid version,
yeah.
you're getting live data, right?
Yeah.
So it'll pick everything up, and it's got like pretty much everything on it. I don't
Right.
know. Is it something to trust all the time? No, but does it help
Right.
you get an edge?
Yeah.
Maybe.
Yeah.
Right.
Look. Yep.
You could also just ask it like, hey, in this county, you already know the county's hot. In this county, what are the average types of properties that sell the fastest? Right. It might say agricultural land over 20 acres. Okay, cool. Now I know that. You could say, okay, well, what's the price per acre average property sells in King County? So what's
Wow. Yeah. That's pretty slick.
Yeah. We just started, created a team account, and we have like all the people on our team like using it now, just for little ins and out things, formulas for Excel and all that stuff. It just really helps. Yeah.
It's pretty cool.
So what else you got?
Well, so one other question is, if you're doing seller financing, I'd always sort of prefer to go with a title company, but then again, if I can save, $1,000 or 1,500 or, whatever, if I can split something with the seller and it's a really simple deal, I'm kind of like, geez, do I even really need a title company? What's your feeling on that?
I always use a title company.
Yeah. Okay.
Yeah. You know what? I'm just like, I always look at it. I'm like, I don't want to, the one time I don't use the title company is the time that something bad is going to happen,
Yeah.
So I'm like, for the extra $1,000, whatever the case may be, I think it's just worth it. Get something recorded, all that stuff. I mean, you could do it yourself. You could self-record, whatever. Like, it's worth it, but like, I don't know. I just like that's,
Yeah.
it's kind of like just getting that title insurance doesn't really do anything. Will it actually do anything? I don't know. But I think it just gives me peace of mind. I mean, you could buy title insurance too from First American if you want it. So even if you wanted to self-perform and do whatever, you go on First American and submit the stuff and buy a title insurance.
Huh. That's interesting.
Yeah.
It's
still costs a couple $100, but
right.
Yeah. Could be a different way to do it. I've never self-closed on a property, and I don't think I ever will. It's not for me.
Smart. Yeah.
So
I'll do that going forward.
Yeah, I mean, if you're comfortable with it, look, every different strokes, different folks, right? If you're comfortable with it, by all means, do it. I prefer to use the title company. When we're buying houses too, even if we're buying on seller finance or whatever, still use the title company always. So
yeah, I had a deal where basically it was sold on a land contract. As far as I can tell, like I got title insurance going in, so I've got that.
Yeah.
And I was like, well, I don't know.
Land contract is a little different though too, because you're not technically passing the deed off yet.
Right. Exactly.
So it's like a lease to own in a way, right?
Yeah. Yeah.
You'll get it when they're fully paid off. And at that time, that's when you do the final closing.
Yeah.
Right.
Exactly. Right. Yeah. At that point. Yeah.
Yeah. But as long as when you bought it, you got title insurance knowing you're the owner.
Oh yeah.
I don't see anything wrong with that. Now, the only benefit of you doing it now versus later is it's recorded, like it's a recorded transaction. So if anything happens, you could cancel the transaction. You could file foreclosure proceedings, things like that. That might be the only thing. Now, with your contract for deed,
Yeah.
With your contract for deed, are you making sure there's clauses on there that they're not allowed to put any permanent structure until they're fully paid off?
Yeah, I don't think I did.
Okay,
That's
so
better. Yeah.
yeah, so make sure you do that because what could happen is if somebody puts a house or a mobile home or anything permanent onto the parcel, like
Yeah.
they could put a an RV or something like that.
Right.
It's a mobile, right?
Yeah.
But you can't put any permanent type structures on a contract for deed because they don't technically have title for the property.
Right.
They shouldn't be able to build anything or anything like that, right? So that's also one of your protections inside a contract for deed because if they go and build something and now you have to foreclose on them, well, now you have to go through the whole foreclosure proceedings and
Yeah.
remove them, everything like that. Versus if they're on, something mobile, they could just pull it off and that's done. You just separate the land, and the next month you could sell it to somebody else. So you got to make sure in your contract for deed you have that, explicitly written up. So
That's good. Yeah. I think what I was thinking, but I can see that it's not really specific enough, was something to the effect of if let's see, basically if the deal falls through, the buyer has to return the property in the same condition, which that's way too vague. I can see that now. I'm definitely going to look into, yeah, making that a lot more specific, permanent
yeah,
structures and so forth. Yeah.
I mean, you could always amend it, right? Just say, hey, we just updated a few things, so I just want to amend the contract and just add these protections in here. You
Yeah.
know, and just let them know it's this protection for both of us. I want to just amend the contract so we're both protected,
Right.
and that you're within your rights, I'm within mine. That's
Right.
all. Most people, if you sell it on something like that and provide some kind of like value, they're not going to say
Yeah.
no to it.
Yeah.
So
Yeah.
yeah,
No, that makes total sense.
yeah,
Yeah. They can always buy it out, if they really just want to put something on there, just, okay, fine.
exactly.
Let's consummate the deal.
Exactly. And that's honestly, that's really the main ticket because people get this land and they're like, I'm going to build a house. And they go through all the planning process, all this stuff. And then their clause says that they have to pay off the note first. Well, then they're like, shit, well, I guess I got to pay that off, which allows you to get it paid off sooner.
Yeah.
Right. So
Yeah.
it accelerates it. Also, doing partial lien releases are always good to have on there too. So if you ever want to do where you could do a partial lien release. So if you ever want to sell, let's say you want to, this is more of when on the buy side and you're going to do a subdivide, but we always put a partial lien release into our clauses. So basically, if we're going to buy something on seller finance, that's let's say 50 acres and we're going to chop it up into 10 acres and it's on seller finance, we give ourselves a partial lien release so that we get release, a fifth of the lien when we go to sell one parcel, but four-fifths of the lien is still there. So it
Right.
just allows us to sell parcels as we go.
Sell one at a time. Yeah.
Exactly, because we technically couldn't get title for something if there's a lien on it. And to transfer the lien, they're not going to, because they're going to say, well, the lien is for this, not this. So yeah,
Interesting.
partial lien releases are important to get too.
Yeah.
You can put that in your contracts as well. So
That's pretty cool. Love that.
yeah. Yep.
Dennis, one other, this is kind of not like a super high priority thing, but it's just kind of driving me crazy curiosity wise is, so I will look up properties. So so price.com has these comp reports, and when you download them, they give you a KML, which is this file that loads Google Earth for the property and then similar comps in the area.
Yeah.
And on those pictures, oftentimes you'll see like this kind of shaded area. It's either most of the time it's some kind of a shade of dark red. I've seen them. I have one here that I found where it was like some part of it was red, some of it was green, and I've yet to figure out. And I've run some Google searches and asked price, and I just still haven't found an answer to it. But I don't know what it means. Is it like that you can't perk there, or this is in Arizona primarily where I'm seeing it? No, I think maybe I saw one in Tennessee.
If you're seeing it on like land ID and stuff like that, that's what it shows, like red soil, green soil, all that stuff. If you're looking at the soil overlay,
Yeah.
as far as the zoning
This is
goes,
different. Yeah.
yeah, it is. I think that is more. I'm not too sure in their KML files as far as that looks, but I know with land ID and stuff like that, usually red means you can't park it, right? So maybe
Hmm.
there is something to that. Or it could just be how they're looking at it from a because they do like geo pricing. So it could be like how they're geo pricing it, like this squiggly line over here is based on this comp, or this is based on this comp. I don't really know how their API does it. I'm not too sure. So you could actually, I mean, I don't really use them. I don't use them for pricing or anything like that, just because I don't know, I feel like getting that personal touch on the deal. Like I don't want to use comps that they have sometimes because they're
Right.
whatever. They might not be a good comp. So I'll remove them and do my own stuff, right? I price my own. That's pretty much what we always recommend. This way you have actual pulse on the market.
Right.
But there is something to be said about like using some of that stuff. Those KML files are nice because they actually drop out like the whole view of all the comps. It is something you could do yourself, right? It's about clicking out, zooming in. So
Right. Yeah. I just use it sort of because it's convenient and it's it's just another sort of data point.
That's it. That's what I look at. It's another data point. It's another fact checking point. But yeah, absolutely. Cool. So what else you got for me?
Well, I think the only other thing I can think of, and this was great, is do you ever insure a property once you bought it or when you're under contract?
Just title insurance.
Okay. So you don't worry about like somebody, trying to sue you because they fell in a rabbit hole or something.
It's not something I've ever really thought about worrying about, but the funniest thing is nobody's ever brought this up to me.
You're the third, brought it up.
Yeah, you're the third person that brought it up to me today.
Really?
Yeah. I don't know why, but you're the third person that's brought it up to me.
It's a sign. It's an omen.
Yeah, it's funny because I had a lender bring it up. They're like, "Oh, do you get liability insurance on each property?" I'm like, "No, why would I do that?" And then this other guy I do deals with, he's like, "Hey, should we get liability insurance on properties?" I'm like, "Where's this coming from?" And then you just asked me that. Now it's like, shit, should I be getting liability insurance? No, so I don't really worry about it too much. One, because if you're buying under an LLC, you're protected by the LLC itself. So one thing you could do is instead of getting a policy for each property, whatever the case may be, just get a $1 million umbrella. Yeah. Right. And just call it a day, right? Yeah. If an incident happens on a property, you have your umbrella. That covers you for all properties you have. Yeah. Now I'm probably going to go ahead and go do that because now that you brought it up, 2 other people have today, I'm going to just be shitting bricks all day. So yeah, I'm probably going to end up doing that.
Yes, you go into the insurance business.
Yeah, right. I know. It's like title insurance. It's like the biggest scam out there. We're paying for somebody else to verify they did their job right. That's what we're paying for. It's like, what the hell, man? I can't wait till blockchain title is a more prevalent thing because it's just going to be so much easier. Like you could just follow the chain of title in seconds, but we're not there yet. Get there.
All right, one last question. So you just raised an interesting point about like you're buying it in an LLC. Do you ever buy in a trust?
You could. I've never bought them in a trust. If it's a property I'm going to hold long term, I would consider it more buying it in a trust. But for quick flips, I don't really bother.
It's so complicated. Yeah.
Yeah. One thing we're actually working on doing now is separating our marketing and our holding LLCs. So we're going to have our marketing LLCs, Cash for Land USA. But what we'll do is after we get a contract signed, we're going to assign it to ourselves, right? So internally assign it from Cash for Land. That's what we open title with. We're going to assign it to our other company, and that company is going to be the one that closes on it. This way, there isn't that cross collaboration when people look at when they look at like who's the owner on record and Cash for USA, they look it up, blah, 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 and they see like we're buying them at a discount, right? Kind of separates that stuff. So we're working on opening a second LLC to buy the properties under versus marketing under is another one. So that's just another little tidbit, because if you get sued, let's say, on your marketing LLC, but you don't own any assets under that LLC, it's all just marketing, then it's just another layer of protection is all it really
exactly. Yeah.
That's all.
Yeah.
So
that's sweet. Love that.
Yeah. So we used to do it for houses all the time. And what I would do there is I would I have my marketing LLC, my purchasing LLC. Actually, I would have different LLCs for different states, right? And then what we would do is my marketing LLC would get a property under contract for, let's say, 200K, and I would assign that property, wholesale it essentially to my other company for 220,000, right? And then that's the number that I'm going to lenders and saying, this is my purchase price is $220,000,
Right.
right? And what I'm doing is when I buy that property, I'm making 20K on the back end, which actually funds my down payment or something like that. Most of the time, half the down payment. So I would do it strategically as long as my numbers made sense, where I'm still less than 80% of market value. Then I would be able to kind of like I finagle the numbers to make it work out. So that's another little ninja secret that we used to do for housing. We still do.
Well, you just brought up, all right, last question, I promise.
No worries. Dude, you could hop on these anytime. Just grab that link, pick another date, and we'll chat again. I love it.
So, do you have different LLCs for different states?
No, for marketing and for a short-term holding, we have one LLC that does all states.
Okay.
For anything that we're going to be holding long-term, like we're going to be buying land as well, just to hold for timber farming and stuff like that. Those types of properties we're going to be buying under separate LLCs.
Right.
It's going to be long-term, so the tax rate's different, all that stuff. So it's also separation from marketing versus, whatever.
Right.
But most states, they typically want to see that you're holding a property in an LLC that's registered to the state that you're holding it in. Right. So if you're, like, for instance, I own properties in Texas. My houses in Texas that I own are under my Texas LLC, right? But then the houses in New Jersey that I own are under my New Jersey LLC. Houses I own in North Carolina are my North Carolina LLC. Florida. So, like, I keep them all separated, right? And it also doesn't make a headache for taxes, absolutely. But it just makes it easier for everything, right? Asset protection, liabilities, and all that stuff. So, yeah.
Well, I've seen some, I can't remember where it was, but at one point I had this impression that this was a state of Arizona wanted you to only do business in an Arizona registered LLC.
Yeah.
I never really I wasn't totally convinced that you had to. And I talked to some other, I think, folks, I don't know if it was an attorney or not, who basically they said, no, you can be doing business in any state, or you can have an LLC registered in another state and still do business in Arizona. It's not like you have to, just to market there, or buy there, you have to have a separate LLC. So
no, you don't. So that's the difference, like with holding versus marketing.
Right.
So marketing could be whatever, but holding, most states want to see you hold it in a state LLC. But what we do is we set up a parent LLC, which is our like Wyoming LLC, Delaware and LLC, whatever you want to do, whatever non-disclosure state you want to use. And what that does is that just basically helps us like protect it creates anonymity, right?
Yeah.
And then so that's our main LLC, and everything underneath that is underneath that. So like we just keep creating LLCs underneath it.
Interesting. Yeah.
Yeah.
Cool.
So like my main for houses, I have my main LLCs out in Wyoming, and that's my my main one. And then everything underneath that LLC, like I have all the other ones, Texas, New Jersey, Florida, North Carolina, they're all underneath that.
All right.
So yeah.
Cool.
It just helps create like whatever. And then what you could do too is when you're going to JV on a deal with somebody, your LLC JVs with another LLC, right?
Right.
So like whatever your company is, JVing with whatever that company is, and then you guys get 50-50 ownership that you would just write in your operating agreement.
Right.
And you're creating a joint venture for that specific deal. So that's a lot of things we do too.
Yeah.
So, yeah.
Cool, man. Wow.
Yeah.
This is great.
Yeah, man. Cool. Let me know if you want to book another time. Like, it's great chatting with you. So
yeah.
I'd love to see your results and stuff too, and how things are moving along.
Cool.
So,
I'll keep you posted.
Man. Awesome. All right. Well, thanks for hanging out. I appreciate it.
Thanks, Dennis. Yeah, I really appreciate it.
Thanks, Mike. I'll see you on the other one.
All righty. Ciao.
All right. Later.